Hello there, my friends. Chris Marcus here with you on Thursday, August 17th. And today, a quick video about an update from James Rickards. Perhaps you're already familiar with Jim's work. Jim's a pretty well-known figure in the gold community. And additionally, I happened to read Jim's first book, which I believe was Currency Wars, the first one. Whichever the first one was, he's an interesting figure. He's participated, as he writes in his book. Actually, one of the I think it was in the Pentagon. One of the military divisions actually brought him in and was really investigating economic warfare and really if the dollar crashed, what would happen. He's had some interesting calls. Had some that he was talking about last October 1st, which, well, perhaps mechanically some things may have happened in terms of big price move and hasn't. So anyway, factor this in as you will, although in the quick article that he posted, was reposted on Silver Doctors. We'll have the link below. In either case, a few interesting comments, and we'll just go through them real quick and keep you up to date as we do here on arcadieconomics.com. First of all, Jim mentions that Russia and China continue to be huge buyers of gold. Certainly seems in line with everything I see and hear every time I hear figures coming out of India, Russia, China. And apparently my good friend Dave Kranzler and a few others have reported that Turkey has been a big buyer of gold, bigger than normal recently. So big buyers still in the market. And at one point he says the physical supply situation is tight as a drum. So again, certainly we've heard comments like that before, maybe not specifically from Jim. You know, it's one of those things where just because you hear it maybe doesn't mean go out and do something, but certainly if we were at the period right before we were about to see a move up in the price of metals, certainly one of the signs that you would expect to be there. So Andrew McGuire has talked about tightness in the silver market, Ted Butler, a few other well-known folks. So Jim's seeing the same thing too. And he mentions the problem, of course, is the unlimited selling in the paper gold markets, such as COMEX gold, futures, and similar instruments. We've talked about that a lot here, that basically the reason the price stays so low is you can write and sell any amount of paper contracts, yet that doesn't mean that you have the metal to deliver. If someone calls in all of your paper contracts at the same time, you may be familiar with this concept from It's a Wonderful Life. I don't know if Santa Claus is going to come save whoever's short all of that gold and silver, but in fact, Jim goes on to mention here one of the flash crashes. It's a tricky one. I'm struggling today, but we'll get there. Was precipitated by the instantaneous sale of gold futures contracts equal in underlying amount to 60 tons of physical gold. And to put it in perspective, he goes on to say the largest bullion banks in the world could not source 60 tons of physical gold if they had months to do it. Again, I can't confirm this is what Jim is seeing, although what I can say is that it seems in line with the things I've been seeing and hearing. Mentions August and September are traditionally strong seasonal periods for gold, partly due to the wedding and gift season in India, where strong buying prevails. That's consistent with everything I've heard again. And again, is coming up. In September is the India wedding season, so they do buy a lot of gold there. Not quite like the Americans. We're a little slower here, but we get there eventually. Although one thing the American government is good at is poking some of the creditors and potential trading partners. And Jim mentions deteriorating relations between U.S. and Russia will only accelerate Russia's efforts to diversify its reserves away from dollar assets to gold assets, which are immune to asset freezes and seizures. You know, that's what I would do if I were running Russia. do Russia or China or some combination thereof, the U.S. really pushes it, can they say, all right, well, we're dumping our treasuries, then the U.S. has a real problem. So it's always bizarre to see how confrontational whoever's president or whoever's actually running this show continues to be. Again, another note, countdown to war with North Korea has begun. And here's an interesting one Jim mentioned. He says the Fed will not hike rates again this year, which certainly to me is plausible. I'm sure they'll talk about hiking rates. Certainly they'll do that. But certainly could we go, despite what they may have said? Again, I say almost on a daily basis, the Fed's been saying they're going to raise rates and undo the balance sheet for 8 years now. So, yeah, I think that's actually very possible. Now, Jim mentions acute shortages of physical gold have set the stage for a delivery failure or short squeeze. Certainly any precious metals investors out there, that would be good news. Again, essentially what that means is that people are saying, I want my actual metal, and in the process of whoever's short having to cover, you would see a pretty substantially higher price. Last thing Jim mentions here, get ready for an explosion to the upside in the dollar price of gold. Make sure you have your physical gold and mining shares before the breakout begins. When that actually happens, again, I wish I could tell you that, although just wanted to share another well-respected voice in the gold community that's seeing the same things. Again, this isn't necessarily the easiest trading situation in history when you're trying to capture what's a bubble and take advantage of something that you know has to converge at some point. You just don't know what it is, but that's again why if you're just buying metal and storing it away and what you can keep and what you can save and not doing anything on margin or leverage, that you can get forced out of your trade. But rather than having $10,000 sitting in the bank, if it's money that you can leave for a longer time horizon, certainly I've converted mine into silver and I think gold will do well as well, although silver, for reasons we've discussed before and we'll discuss again, great reason to hit the subscribe button, I think we'll do better, certainly on a percentage basis, all the industrial demand. So anyway, again, the link to Jim's interview is below if you want to take a look at the blog post, but hopefully that gave you all the highlights and just some good news in case you're getting a little tired waiting and wondering if things are for missing something. I don't think that's the case. So we'll see how it develops. In my opinion, hopefully sooner than later. But in either case, hit the subscribe button and we will see you again tomorrow. Thanks.